Something huge is happening right now in the world of finance. It's kind of this quiet revolution, but trust me, it's going to completely redefine what we even think of as money. We are literally talking about a battle for the future of money itself. And yeah, the first shots have definitely been fired.
So, just how big is this? Well, get a load of this number. $33 trillion. That's the mind-boggling projection for how much money will move through stablecoins in 2025. That's a jump of 72% in just 1 year. This is not some niche crypto thing anymore. This is the new reality of global finance, and it's coming at us fast.
And this massive wave has set up a huge showdown between two really powerful forces. So in one corner, you've got central bank digital currencies, we call them CBDCs, which are basically the government's answer to digital cash. And in the other corner, you have stablecoins, the private sector's answer. It's the classic showdown, right? The old guard versus the new disruptor.
All right, so let's dive in and meet these two digital titans, because whether we realize it or not, they're already starting to reshape the entire global economy.
First up, the central banks. And let me tell you, they are not messing around. They are moving fast. China's digital yuan, it's already woven into their economy. Brazil's not far behind with their drex, and Europe is aiming for a full-on digital euro by 2029. So make no mistake, this is a huge, coordinated global push from the most powerful financial players on the planet.
But hold on, it's not just the governments making big plays. The private sector is about to have its own massive moment. Picture this. A new law, maybe called something like the Genius Act of 2025, finally comes along and lays down the rules of the road for stablecoins. And this is the key part, right? A single piece of legislation could take stablecoins from this kind of Wild West asset and turn them into a totally legit, regulated part of the financial system.
Okay, but with all this power, there's got to be a catch, right? And there is. A big one. Both of these titans create a huge problem for the banking system we have today. And it all comes down to one terrifying idea: the digital bank run.
The key word you're going to hear is disintermediation. Yeah, it sounds like a mouthful, but the idea is actually pretty simple. See, banks work by taking our deposits and then lending that money out. Disintermediation is the risk that we all decide to pull our money out of our regular bank accounts and stick it in, say, a super safe CBDC or a stablecoin that pays better interest. If that happens, you're starving the banks of their cheapest and most important source of funding. It's like cutting off their main fuel line.
And here's where it gets really scary. In a crisis, this could happen at a terrifying speed. Just imagine some financial panic kicks off. But instead of people lining up around the block at ATMs, millions of us move our life savings to the complete safety of a government-backed CBDC with a single tap on our phones. A bank run that used to take days could now happen in seconds. Think about that.
And hey, even if there's no big panic, you're still going to feel this. It's what some call slow disintermediation. As banks have to find more expensive ways to get their funding, guess who pays for that? Yep, you and me. Research is showing that your next car loan or your mortgage could get anywhere from 20 to 50 basis points more expensive. So this is a perfect example of how this huge systemic change can actually hit you right in the wallet.
So with these huge risks on the table, you might be thinking, what are the powers that be doing about it? Well, they're not just watching from the sidelines. They are actively writing the new rules of the game, building in safeguards to try and tame these digital titans.
So, how do you actually stop a CBDC from breaking the whole system? You build in some clever speed bumps. First, a simple holding cap. You might only be allowed to keep, say, 3,000 euros in your CBDC account. Second is something called tiered remuneration, which is just a fancy way of saying, hey, if you hoard too much money in here, you're not earning a single cent of interest. And then there's the waterfall process, which is really interesting. It only pulls money from your regular bank account right when you need to make a payment. It basically turns the CBDC into a payment tool, not a bank killer.
Okay, so what about stablecoins? Well, regulation is completely flipping the script on them. This whole Genius Act idea would force them to be backed one-to-one with super safe assets, like government bonds. And that transforms them from a tool for crypto trading into something much, much bigger, a regulated system for corporate cash management. Basically, it's becoming the ultimate tool for big companies to manage and move huge amounts of money, instantly, securely, 24/7, anywhere in the world.
All right, so we've seen the players, we've seen the risks, we've seen the rules. So, who wins? The state or the private sector? Well, it turns out it's not really a fight to the death. It looks like we're heading for more of a hybrid future.
Just look at them side by side. You can really see how different they are.
A CBDC offers you ultimate security. It's backed by the government itself, so there's zero risk of it just disappearing. But that comes with pretty strict oversight. Stablecoins, on the other hand, they have what's called counterparty risk, meaning you're trusting the company that issued it not to go bust. But what you get in return is pure innovation and speed, especially for things like international payments and the whole world of decentralized finance.
And all of this leads to what seems to be the most likely future, a hybrid money ecosystem. The best way to think about it is like this. The CBDC is going to be the risk-free anchor of the entire financial system. It's the bedrock, the foundation of stability. But stablecoins, they're going to be the global engine, the fast, innovative, powerful tool that drives programmable, borderless commerce. One gives us safety, the other gives us speed.
So, at the end of the day, these two titans aren't going to have some epic final battle. They're actually going to learn to live together, each with its own crucial job. And together, they are going to completely rebuild our financial plumbing, creating a new world of both government stability and private innovation. So the only real question left is, how is all this new money going to change what's in your wallet?